Hi, my name's Dan Curtis. I'm here with Nomad Capitalist, and today we are talking to Andrew Aziz. Andrew is a Canadian trader and founder of Bear Bull Traders. It's an online community of independent traders. He also runs a website, bearbulltraders.com. Andrew, hello. Thanks for being with us.
Thank you for having me. I appreciate that, Dan, and I've been following your work for a long time. And thanks for the contribution for all of the digital nomads that are trying to growth wealth all across the world. Thank you.
Yeah, there's a lot out there. I'm going to jump right in with our questions. So interest rates are up, markets are down. How does that affect your average day trader? How are you guiding them through this system?
So right now, as a day trader, we are in a bear market. I mean, as a day trader, there's a lot of trading opportunities for us. It's a nightmare for investors, obviously Wall Street and anyone who's invested in the financial markets is a nightmare. But as a day trader, people like us who are just looking for short-term volatility has been amazing. This year has been one of the best years that I had so far in terms of trading. Besides the pandemic 2020, that was also a really nice year. But this one has been amazing. The difference from this bear market from the other ones is it's a long bear market. It's been like 10, 11 months that we are in a decline of the prices, but the volatility has been amazing. Particularly, I'm talking about the US stock market, the equity market, but it's kind of all across the board because they are all kind of correlated. You see the currency markets are volatile. Like you see British pound drop 4% in one single day a couple of weeks ago, which was unbelievable. And commodities, oil and gas, and there are volatility in that. But as a day trader, the volatility is great and it's getting much better. What I noticed myself is that I used to trade single stocks a lot before this bear market. Now I'm really having a lot of opportunities every single day on the overall market and indexes. I rarely traded SPY or QQQ, but now I see as a day trader this volatility intraday is enough for me to just focus only on indexes and their leverage products. It wasn't like that. Bull market is not volatile. Bear market is very volatile.
That's surprising. So you're finding opportunity in a bear market. My next question was going to be, what sectors are you particularly bullish on? It sounds like it's across the board, but is there anything that you're particularly pushing?
You mean sector bullish on a longer term investments or just for the trading in short term?
I would be talking short term.
Short term, if you want to trade, definitely on the short term, anything that in the long term produces solid cash flow. I think those are the ones that I would be bullish on that. I think the type of companies and the sectors that Warren Buffett like, for example, they're producing cash flow, they're really established, they're not really growth, high-flying companies. And when you look at the indexes, at least for the US stock market, what you see here is that the biggest one that they got really hit are the growth companies, small caps, and technology companies, because those are the companies that their valuation are more projected in the future. And when you're in the rising interest rate environment, the future cash flow is discounted and the valuation of the company is going to come lower and lower. Right now, if I want to put my money in there, I put my money in oil and gas companies that they have high dividends. Banks are doing really well. Utilities are doing well. I'm bullish on those ones. For trading, intraday trading, I think the sectors that are extremely sensitive to interest rates and recession, they're really good to be around in that sectors because they're a pocket of volatility and you can get money out of them.
And I've heard you talk a lot about defensive stocks. Is that something you're still pushing? What exactly is a defensive stock to you?
Defensive stock?
Yeah.
I don't think actually I did mention defensive stock. I said the utilities stocks, that they're stocks that are the type of stocks that Warren Buffett likes. Maybe I may mention index funds, like QQQ, SPY. IWM. These are index funds, and in these index funds are bringing a lot of volatility.
Well, how would you differentiate advice you give to a day trader versus advice you'd give to a more institutional investor, somebody who's looking more long term? Or is there any kind of diversification strategy or any kind of trading strategy that you would use that's different between those two groups?
Yeah, there's a lot of differences there. As a day trader, you're just looking at trading opportunity in a day. At the end of the day, you're on cash. But then an institutional trader or an investor has to have a higher time frame, and has to accept the fact that the market can go down for years until come back up. So the risk management would be completely different. Its return on investment would be different, and expectations would be different. Day trader, I'm looking at trading Apple this morning right at 9:30 when the market opens, and I finish my position at 10:15, like only 45 minutes. Like today, the day that we're recording, Netflix was gapping up 15% because of the earnings. We traded Netflix for 15%. I traded that really nicely, but I'm not in Netflix anymore. I don't care what's going to happen to Netflix tomorrow. But if I'm an institutional investor, then I have to keep track of Netflix growth, subscription base, the revenue model, and everything else. And that's the beauty of day traders, that at the end of the day, you're on cash. You don't need to worry about what's going to happen to the company. But what's the downside on that is when you're day trading, there is a limit to the amount of money that you can have in your account. For example, if an institutional trader has $100 million in their account, they can't day trade with that. That's too big. Day trader accounts are usually talking about $50,000 to $200,000, a couple of $100,000. This is the perfect sweet spot that you can scout the market. As your account is getting broader and bigger, then you can't day trade. You need to diversify in swing trading and investment and bonds and all sorts of financial assets.
It just sounds like an entirely different way of thinking from an institutional standpoint. How many positions would you take in a normal day? I mean, how often are you in and out of these stock trades? In a normal course of your working day.
This morning I traded Netflix 2 times. One time I got stopped out, and the second time worked really well. So that's 2 trades. And I also traded the index of technology in the US market, QQQ. I traded that 3 times. One time again I got stopped out with a loss, and the second 2 trades worked really well. So in total, I made 5 trades in the span of 90 minutes. So
okay.
For about an hour and a half, I took 5 trades.
And is that typical? I mean,
that seems... It's more like into the extreme. I usually have 1 or 2 trades, but this one is, toward the push to the limit of number of the trades that I take per day.
Okay. And how much, if you're trading at that rate and you're dealing with, say $50,000 to $200,000 as kind of a daily cap, what kind of diversification can you build out of that daily portfolio? I mean, do you go in looking to build some kind of balance in what you're trading?
No, that's the beauty of day trading, is that you can put all of your portfolio in one single position. You don't need diversification, but you need a stop loss. So if you go all in, like for example, this morning, I took a big position on Netflix. That was almost 90% of my buying power, which is fine for me because I know immediately I can get out of it if it doesn't work that way. But as an investor, when you want to have position overnight and over weeks, that's just a suicide, putting all of your money in one single stock or sector or one asset. So day traders, they can go all in one single stock, but that doesn't mean that they should lose all of that. No, you have a stop loss in place. Like you say, I'm going to buy $200,000 of Netflix. If it works, I make 10%. If it doesn't work, I lose 1 or 2% and I come out of it. And the market has enough liquidity that you can go in and out very fast on that. You can't do that on the markets that are not liquid. Like for example, a lot of crypto assets or crypto coins that we call them altcoin or, sorry my language, shit coins, they don't have liquidity. So you can't really go all in there. And even if you go, then there's probably a good chance that you cannot come out of it with the speed that you want. But Apple, Netflix, Facebook, Meta, there are so many liquidity, so many orders are going through that you can go in and out with a, with a small spread in there. So day traders can go all in one single trade, but their risk management is different from someone who's diversified in different sectors and different assets.
Well, it's a fascinating look at that world. Obviously, we have a lot of viewers who are nomads. They're on the road. They're traveling around the world. Is there any limitation to what you do in terms of geography? I mean, I assume you can do what you do everywhere, right?
Oh, that's the beauty of it. Yes, exactly. I have traded from remote places in Papua New Guinea. It's an island north of Australia, to over 22,000 feet in Ecuador in the volcano with a really good satellite internet that I had. So it's just amazing that with a good internet speed you can do it. And now that with the Starlink internet is coming to the planes, you can actually have that while you are flying in the air. You can have that as well. So there is no limitation. The time zone is one thing that you have to remember, that if you are trading the US stock market, you have to be available 9 until 11 o'clock in the morning on the New York time. So it's really hard if you're living in Bali or Bangkok, in that area, because that time zone will be a little bit different. But that's just for US stock market. Many other markets like commodities or Forex are open 24/7. But the volatility for my market, which is the US stock market, is between 9 to 11 a.m. on the Eastern time zone.
Is there any other geographical considerations that you take into account when you're trading? I mean, you're based in Canada, I understand, but is there any pluses or minuses to being based in Canada versus the US versus Malaysia?
Obviously, the taxes, I think tax purposes is really, really important. I think if you are working online and you are trading online, you don't have to be staying in a country that it has high taxes. Like Canada, for example, is not a very tax-friendly country. And if someone doesn't have any tie to Canada and makes online, as a digital nomad or trader online, they can definitely, just go somewhere in Asia. Singapore, for example, is a very tax-friendly country, and stay there. But no, you can trade U.S. stock market from anywhere from the world, pretty much.
Well, yeah, again, fascinating. Tell me, from a market standpoint, from a client-based standpoint, what are you most optimistic about? What are you're finding opportunity, it sounds like, even in this particularly harsh market. What gets you excited about this year and the next?
I think what's exciting for me is that trading has become more widespread, and the technology would be it's getting better and better for people to trade. And now you see people trading complex instruments through just a mobile app. And that's an amazing thing. 10 years ago, it wasn't like that. The direct access to the market, to financial market, wasn't that easy. It was only for elite of Wall Street and Wall Street firms. So the opportunities has been amazing. And a lot of new generations of the people who are coming, the millennials and the Gen Zs that are coming, they have the attitude of do it yourself. They're not putting their money in the mutual funds. They're not just staying and see someone else take control of their life. So the market is getting more active, more volatile, and there is more opportunity for people to be participating in the financial markets. And that's the exciting part for me. Are we going to see higher or lower? I don't know. That really depends on how the central banks all around the world can control the inflation. Obviously, pandemic was a shock to the system. I think there are some pains ahead, but I don't think market is going to crash in a way that it did like in 2008 or in 2001. A lot of these companies, these technology companies, are not dot-com bubble companies, and it doesn't seem that they have a very systematic risk to our financial system. It's just that the economy has to go slow down and through the business cycles.
And it sounds like even with the market doing what it does, that there's still money to be made on a daily basis.
Yeah, exactly.
Well, Andrew, we really enjoyed the conversation. I can't tell you how much we appreciate you sharing your wisdom and sharing some of your thoughts on the market and your client base. We look forward to talking to you in the future. And if any of our followers want to check you out, we can do so. You want to tell us where we can find you?
Yeah, thank you so much. I would love to hear about, if any one of your audience would like to know about trading, active trading, they can just Google my name, Andrew Aziz, and they can find me in all social media. I'm in Twitter, Instagram, Facebook, YouTube, or my email, andrew@bearbulltraders.com. And I have some publications on active trading that, again, if you Google Andrew Aziz, you can see my books available on Amazon and other places.
Wonderful. Well, we appreciate the time, Andrew. I hope you have a lucky day trading.
Thank you so much. Appreciate that, and have a good day.
You too. Thank you.